CentraFX once again, traders. We have gone really far in this free forex trading, and this is the section of technical analysis. So in this course, in this section, I'm going to be explaining how market structure works. So if you are just joining us, I would like you to hit the like, subscribe, and also turn on your notifications so whenever we post valuable content like this, you'll be the first to be notified about it. So let me explain briefly what market structure really means. So in forex trading, market structure refers to the way the market moves, highlighting patterns of price action over time. Understanding it is essential for identifying trends, price action levels, and potential opportunities in trading. Here is a simple breakdown for beginners. We have the uptrend, which is called the bullish market. We have the downtrend, which is called the bearish market. So whenever you hear a downtrend, that's the bearish market, and whenever you hear the bullish, it means we're in an uptrend. And we also have the ranging or consolidation markets, and we have support and resistance. So let me quickly see if I can show you what an uptrend means in the chart. So I'm going to be demonstrating what the uptrend is, and I'll be showing you an example here. I've already drawn down the diagram to make it more faster. So I want to try to make this video very fast. I don't want it to be too lengthy. So uptrend, the price, when you get the word uptrend is the price is consistently moving higher. So the characteristics of an uptrend is you see a series of higher highs and higher low. So you see higher high, like now you see there's an higher high here, higher low, higher high, higher low, higher high, higher low, higher high, higher low. So this is an uptrend. These are the characteristics of an uptrend. So trading focus for an uptrend. In an uptrend, traders look for buying opportunities. Going long since the market shows strength. So whenever you are in an uptrend as a trader, you should always be looking for a buying opportunities. So you don't look for a selling opportunity in an uptrend. That's why there's a saying that says the trend is your friend. So you don't trade against the trend unless you are a pro. So this is an example of an uptrend when a structure is being broken. See, price went up, it came down, it broke structure, it broke this previous structure, which is has given us an indication that price is still trending up. So as long as price keeps breaking the previous structure, it means we are in an uptrend. You see, breaking structure, coming down, breaking structure. So that's an indication of an uptrend. So you keep seeing higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. So you can see this is another demonstration of an uptrend. You see, this was the previous high, price retraced back and it broke this structure to the upside. It came down again, it broke structure. Breaking of structure, BOS means break of structure. So price traced back to the higher low. It came and broke this previous high, which is break of structure. So if you want to be, if you are in an uptrend, you are only meant to be looking for opportunity to go long, to go up. So you always want to be buying in an uptrend and selling in a downtrend. So you don't go against the trend. Um, so let's say price trend up, you don't buy, and it comes down here, it break this structure. So that has given us an indication that price is in an uptrend. So when price is trending down to a more discount level around this zone, so you are meant to be buying from around this zone, not buying from around here. You wait for it to come down to you, then you buy. You can keep on holding your trade till price shows a market structure shift. That is when you want to be selling. So as long as price keeps trending up, you're looking for buying opportunity. So let me show you a diagram of a downtrend. This is a diagram of a downtrend. So you see price came down, price went up, it did a break of structure to the downside, it went up again, it did a break of structure to the downside. So as long as price keeps breaking the previous low, it means we're in a downtrend. So you see price broke this previous low here, it went up, it broke the low again. So we are in a downtrend. So what did I say? I said whenever we are in a downtrend, you always look for opportunity to sell. So this is a downtrend. Price was trending down. So you can see this was the previous low. Price went up, it came and it broke this previous low. It broke this previous low again. It broke this low, broke this low. So this is a downtrend. And you can see this is a higher low, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. So that's how it will continue trending down until price becomes exhausted and the sellers no longer have the power to trend the market, to move the market downwards. So you will see that price will do a change of character, or you call it a market structure shift. So there's one thing about the chart. Whatever chart the price is doing, price will always leave a blueprint. It will always leave a clue of what it's about to do. So if price wants to start, so let's say price was selling and price want to shift structure, it want to start buying. The buyers have, want to take over. The price is going to do what you call a market structure shift. And let me be drawing that so you can see what I mean by that. Let me do this. So you can see this. For example, you can see that price was trending down, it was going down, and these markets cannot just keep going down forever. It will surely want to shift structure and start buying. So in forex trading, you can make money buying and selling. It doesn't matter if price is going down. If price is going down, you should be looking for opportunity to sell. Then if price is going up, you should be looking for opportunity to buy. So you can make money from both ways. So let's say price went up here, came down again, went up again, it came down again, and then price did something like this. Boom. You see this last low, this last high, yeah, this last lower high, yeah. This lower high was not able to hold this price anymore, and then price broke this high, yeah. So this is identified as a market structure shift. So whenever you see something like this, you know that this is a market structure shift. So let me label it so you can see market structure shift. So now price has given us an indication that price is about to shift structure and start buying. So this is what you see. You will see that price will do something like this. Price will trend down and to start buying. So let me give you an example of an uptrend that want to shift structure to the downside. So let's say price does something like this, it broke structure, it came down, broke structure, it came down. You know, this is an uptrend. So as long as price keeps breaking structure to the upside, we are still in an uptrend. So when price is exhausted, price will do something like this. You know, it's supposed to come down and retrace around this zone. Then price will just come and do a market structure shift. It's going to break this previous low. So once this low is broken, this is a market structure shift. So what price is going to do is that price is going to retrace back like this. It's going to retrace back to do something like this. It will retrace back. You know, when price has given us this indication that price has done a market structure shift, it's not going to just start selling immediately, because if it sell from around this zone, is will be very cheap. So it will wait for it to come to a premium level. So price will come to somewhere around this zone, then it starts selling, start selling, start printing, selling. So you can now start selling from somewhere around this zone. All right. So so that is how price moves, uptrend and downtrend. So let me show you an example of a ranging market. A ranging market. You know, we have the uptrend, we have the downtrend, and we also have what we call a ranging or consolidating market. So this is how price consolidates. Does something like this, does something like this, it does something like this, it does see there's no direction, it keeps going up and down, up and down, up and down. You know, the buyers does not have much power to push further. Even the sellers does not have the power to push lower. So now when you see something like this on the chart, you just this is a ranging market. See, this is a ranging market. So whenever you see a ranging market, you are advised as a new trader to stay away from a ranging market, because it's you can lose money while trading with ranging market, because you don't know the direction of the market. When price is ranging, you don't know if price want to go up or come down, because it's ranging. So you would only trade once price has broken out of this range. That is when it will give you the direction of where it wants to go. So you can now start looking for trade entry. So let me explain the meaning of ranging market. You know, the price is moving sideways within a defined range. So the characteristics of this is that price is stuck between the support level, which is the bottom, and the resistance level, which is the top, bouncing back and forth. So this a trading focus you should expect from this kind of market is trader can either buy at a support level or sell at a resistance level, expecting price to stay within the range. So you don't actually know when price is going to break out from this level. So you are advised as a newbie to stay away from a ranging market. Now, let me also talk about support and resistance. So on a ranging market like this, you are will this is a support zone. Support zone is always down. Support. Then the resistance is up. Resistance. So some of you would have heard of the word support and resistance. So this is what it is. So you want to be, when price moves up and is not able to break further, this, the resistance is like a shield that is blocking price from penetrating above this level, while support is a shield that is holding price from penetrating below this level. So anytime price breaks any of this level, it means the support has been broken, and anytime price breach the upside, it means the resistance has been broken. So it's just like a defense, like a shield that's blocking price from going above. So let me explain this. If support, I want to explain the meaning of support. So support is a price level where the market tends to stop falling because demand starts to overpower supply. While the resistance is a price level where the market tends to stop rising because the supply overtakes demand. So a key point here is that um, market structure itself is fractal. It exists on all time frames. So if you are seeing uptrend on a 1 hour time frame, you can also see an uptrend on a 5 minute time frame. So these are all, we have different kind of time frames. You can take trades from any of the time frame, but it is more safer to identify your trend from a higher time frame. So let's say, for example, you are a day trader. So if you are a day trader, it is advised for you to look for your daily bias from the daily time frame. This is a day time frame. So we have different time frame. We have the 4 hours, the 2 hours, the 1 hour, the 30 minutes, the 15 minutes, the 5 minutes. Each of these time frame have their own trend, external trend and internal structure. So let's say we are on the daily time frame. We are supposed to be looking at the trend from the daily time frame, so we can now know how to where we can now know the trend of that day. And so, because like I said, as a trader, we need to trade with the trend. We don't trade against the trend. If you trade against the trend and you don't know what you are doing, you might lose money. And in this trading business, any mistake you do, you pay with $1. So that's why you need to trade professionally. So now let me go to a live chart and let me show you what market structure is. Let me show you um, an uptrend and a downtrend on a live chart. And this one for an uptrend example. So you can see here on the chart, this was the previous high. So price came and broke this high here. You price created a low, lower, a higher low, higher high, it broke this high here. Price came back, and form a higher low. It went up and broke this high. So this was the previous high that was created. So whenever, like I said, when price keeps breaking the previous high, means we are in an uptrend. So price broke this high. It has given us an indication that we are still in an uptrend. So you can see our price retraced back and still broke this high again. So what I want to be looking for in an uptrend is to trade above, to trade is to buy. So I don't have any business selling whenever I'm in a downtrend. I want to keep buying. I want to keep buying. So you can see our price was doing a stain. Price still broke structure here to the upside. Yeah, you see, price broke structure here to the upside. And when price was now exhausted from going up, like I said before, price we do what you call a market structure shift. Did I do that? Okay, let me show you something. Yeah. Mm. Okay, I think I did that before. Higher high, higher low, higher high, higher low, higher high, higher low. And then price is exhausted. After breaking this structure, price came down. It's supposed to react from here, but price failed to react from here to again and continue going up. So price now broke this previous low. Yeah. So this is a market structure shift to the downside. So now what we want to be looking for here when we see a market structure shift is to look for how to have a trade entry and start selling. So but like I said before, price will retrace somewhere around here and then boom, start selling, start selling. So that is almost the same thing that happened here. So when price came, price did a market structure shift. It broke this low here and price retraced back to like a premium level and then start selling. So say it sold, sold. And let me show you what a downtrend is. Yeah, yeah, yes, yeah. So you can see um price broke this low here. This is a break of structure to the downside. This low was broken. It came down. It went up again, and it broke this previous low here. This is a break of structure. So all this here, they are break of structure. This is a break of structure. Break of structure. Yeah, it's a break of structure. This low too. This low was broken. It is a break of structure also. Break of structure. So like I said, as long as price keeps breaking the low, let me show you trend line. A trend line. What a trend line looks like. I don't know. Did I explain trend line for you? Okay. So this is, like I said, this is an uptrend. As long as price keeps bouncing and it's going up. So a trend line, a valid trend line must have three touches. So you see price bounce from here, one, two, and three. So this is a valid trend line. It must have at least three touches. It might have more, but to be on a safer side, a trend line should have at least three touches. So now you can see that as price keep bouncing here, so this is like a support level, a support. I said the support is always down and the resistance is up. Support is down, resistance up. So this trend line serve as a support. So as long as price keeps bouncing on the trend line, so that is like a support. That means this level is a very, very strong support level. That's why price keeps bouncing on this level. So whenever price breach a trend line, you see like this guy now, this guy came, it was not able to hold this support level here. This trend line was not able to hold anymore. So you can see our price came with force. The momentum is came, it broke the support level, it broke the trend line, it came down. So those people that trade break trend line breakout, this is a like this is a very good example of trend line breakout. So you can see our price came down and broke this trend line here, and after price did that, price will trace back to it and it sold. So you can see it sold. So you there are different strategy that you can use to trade. You just need to just and one thing I will advise you as a newbie is don't complicate things. Keep it simple. Keep it simple. Don't just go and start learning too many strategy. You'll just confuse yourself. Just look for make it simple. Look for a simple strategy and then you can start upgrading it with time as you go stronger in the game. So let me do um let me just do some key points that you can go with. You see, market structure is fractals. It exists on all time frame. That means it means you have market structure on 2 hour. If I switch to my 1 hour, you see a market structure there. You see a market structure. So you can choose to use any of the time frame to trade depending on the style of the strategy that you trade. So you can trade from any of this strategy, from any of this time frame rather. So it doesn't matter the time frame you're trading for. You can choose to use. Some people use the 15 minutes as their higher time frame and use this as their lower time frame. So how you trade is that when you spot your key level on a higher time frame, then you switch to your lower time frame at least 2 time frame below where you spot your key level. Let's say you spot your level on a higher time frame of 1 hour, then you switch to your 15 minutes to look for because when you switch to a lower time frame, it's going to be more clearer. That means you are zooming into the future, so it's going to be more clear. You are going to see it very clear. So you can use that to mark out some other key levels, and then you can use the 5 minutes as your trade entry. Why some people that are pro, they go lower to the 1 minute time frame, to take their trade entries. So meaning you are looking at 5 minutes or a daily chart, you find trends, you find ranges, you find key levels on every of these time frame. Then trend lines. I said I made mention of trend line. This is a trend line. A trend line. You can we have trend line here, and we also have a trend line that is trending down. Let me show you an example of a trend line. It's trend like this. You see, I said this. If a market is breaking structure to the downside, a downtrend. This is a downtrend. I said if it keeps breaking structure, this is a short downtrend. So this is a trend line, and I said a trend line is a valid trend line should have at least 3 touches, like 1, 2, and 3. So this is a valid trend line. So this is a resistance. I said this one that is down is support. This is a resistance level. Resistance is always up and support is always down. So now this is a resistance level. You can see our price came to this place. It was not able to breach this place. It came down. It came to this place again. It wasn't able to breach. Then until it was broken here. So trend line means drawing trend lines can help visualize, identify the market structure, showing the general direction of the market. Now, I said trend line, you also have breakouts. So whenever they, like for example now here, this trend line here, this is a breakout. I said a trend line should have at least three touches. One, two, three. So now normally we expect price to come here and still react from here and go up. Like if you zoom closer, you see that when price got to the other side, see this place here, price wanted to react from here and go up, but no, the volume and the momentum of the sellers was very very strong that it broke it. So this is breakout. So it broke the trend line and it came out, and then so this is what you call breakout. Same thing here on this downtrend trend line. See, you can see one, two, three. So you can see normally we expect price to come here and still trend down, but no, it broke out. This is breakout. So a breakout occurs when the price moves beyond a support or resistance level. This is potentially signaling a new trend or a continuation of the current trend. By understanding these basic components of market structure, you will be better equipped to analyze price action and make informed trading decision in the forex market. So the next section we are going to be discussing further into technical analysis, and then I'll be showing you institutional reference points on what you need to spot on the chart, like the fair value gap, the imbalance, what while all those things occurs. So like I said before, when you want to do the technical analysis, you need to also consider the fundamental analysis. So if you are doing this, if you are doing your technical analysis on the chart, also make sure that you go and check the fundamental so you can know if the currency you are trading, if there will be any high impact news that can affect key levels. So there are platforms that we use for fundamentals where we go and check for fundamental, which is the one I use is Forex Factory. So that's where I go and check for high impact news. I'm going to be doing a different separate video, and I'll be showing you how to use this platform to check for fundamentals, so you can use the both of them when you are doing your technical analysis on the chart. Also you need to check your fundamental also, so you won't get stocked out by news high impact news events. So like you see this long candle here, this long candle, normally you see everything they are small and that's weak, but you see this long candle, this is this, it might be that on this particular time there was a fundamental a news event that occurred that make this candlestick to move like this. So all these things you need to consider them while you are trading, while you are doing your technical analysis. So we have the fundamental analysis and we have the technical analysis. So that will be all for today. If you are still active on this tutorial, it means you are a step closer to become a profitable trader. So make sure you turn on your notification, hit the like and subscribe, so whenever we post content like this you can be notified, and see you next time.